Okay, this week's outlook. Like the previous one, it's going to be quite heavily centered around developments in the Middle East. However, with that being said, the US, as of now, as of recording this, are reviewing negotiations that Iran has put forward, which may signal some slight optimism for markets. However, oil is still very elevated at around $105, I believe, which is obviously going to continue to support the currencies receiving the most hawkish repricing following elevated energy prices. That obviously being Europe and the UK. Couple the fact that equities continue to rally due to the AI trade, CTA inflows, and then the geopolitical risk premium around the Middle East actually fading, we could expect the Australian dollar and Canadian dollar to remain on the bullish side this week, but we'll get into the specific currencies in a bit. Just looking at the main events this week, if we go to the calendar, we can see that on Monday, there's not too much. 4 yellow folder events, but nothing serious. On Tuesday, we have the RBA decision, which is a forecasted hike of 25 basis points. And then we also have US JOLTS and Services PMI, which PMI is going to be quite interesting to see what the purchasing managers are actually forecasting following these very elevated energy prices. Wednesday, we have CAD PMI, and then we have some meeting minutes from the Bank of Japan. However, we can already assume that that meeting is going to tilt to the more hawkish side. So yeah, not too concerned about that. Thursday's quite quiet, and then on Friday we have the big NFP. So yeah, that is essentially this week in a nutshell. Moving on to the actual currencies. So starting off with the US dollar, we are neutral to bearish, similarly to the AI daily bias. Essentially, it is definitely a tough one for the week ahead, as there are two main forces pulling the dollar either way. You've got obviously US oil being elevated, which will continue to drive some flows into the US. However, equities continuing their rebound, showing a reflection of sentiment being on the risk on side, will reduce demand for the US dollar and reduce its safe haven appeal. And then also looking at US Treasuries, we're actually starting to see a slight dovish repricing with growing expectations of a more flexible and potentially dovish policy stance. So together, the fading war premium and a shifting Fed narrative are creating a dual headwind for the greenback, opening the door for further downside ahead, we believe. And just looking at the live news here, we can see that recent inflation data was bad news, Fed Goolsbee says. However, when you look at yield reactions, it kind of argues the opposite. And obviously, that is key. Looking at the seasonality index, obviously the current month is actually quite good. May is actually decent for the dollar. But Credit Agricole, they're bearish. JP Morgan are bearish on the dollar. So institutional-wise, it's looking to the downside for the dollar. And then CFTC positioning, you've got asset managers who are bullish, but then you also have leverage funds who are bearish. So it's it's very neutral at the moment for sure. But for us, we're leaning to the more bearish side, even with all these headlines coming out. You just need to be careful with oil. But yeah, that's essentially what we are looking at on the dollar. Moving on to the pound. So we are bullish on the pound this week. We believe it's set for a decent week just due to equities obviously remaining to fly, signalling flows moving into the risk on currencies, one of which being the pound. And then secondly, with energy prices remaining elevated, as mentioned at the start, we can expect to see short-end gilts remain very elevated, if not rise, which is obviously gives the pound support from a rate differential standpoint. And with minimal data for the UK this week, these are going to be the main drivers. And although the UK's 2-year reaction function following the Bank of England rate decision last week on Thursday was more neutral to dovish, the press conference itself was more on the hawkish side. I mean, Governor Bailey stated that higher inflation is essentially unavoidable, which is more hawkish than dovish for sure. So we think rate differentials, sentiment, and elevated energy prices should continue to prop the sterling up on specific crosses. So yeah, that's kind of our feeling on the pound. Moving on to the euro. So if we actually look at the euro, we are bullish. Similar to the pound, really. Elevated energy prices will continue to push the front end of the curve higher, supporting the euro on a rate differential cross. Similar to the Bank of England, the ECB had a hint of hawkishness, as we can see from ECB policymakers making the case for a rate hike due to elevated inflation. Let me see if it's here actually. Yeah, I mean, ECB's Makhlouf says upside risks to inflation have intensified. I believe Reuters said something the other day about basically inflation being unavoidable, similar to the Bank of England. So yeah, obviously yields are right now very much mapped to US oil. So as mentioned at the start, developments up the Middle East are going to be key, but you just need to monitor what's happening with US oil and then cross-reference that with yields, and that will basically tell you what's going to happen to essentially everything. So yeah, I mean, looking at CFTC positioning, extremely bullish on the euro. Asset managers and leverage funds are also bullish, slightly bullish, with obviously a positive change in the spread week on week. So yeah, we're a fan of upside euro for sure. Moving on to the CAD, we're actually bullish, so we disagree with the AR daily bias here, but we believe, same as last week essentially, elevated US oil prices, which is great for Canada's trade balance and economy, obviously supports the CAD, but we also have equities pushing higher, supporting risk sentiment, and the CAD is a risk-on currency. Similarly, the front end of the curve in Canada is also relatively elevated due to energy prices and the Bank of Canada's meeting last week. So yeah, we've got the sentiment pivot, sentiment supporting, rate dynamics supporting, and US oil are all supporting the CAD. So as long as oil remains above the $100 per barrel handle, we can expect CAD strength for sure. So yeah, that's where we're at on the CAD. Australian and New Zealand dollar, we remain bullish. Pretty simple really. Equity markets are sending an even stronger signal. We're obviously seeing major indices such as the S&P, Nasdaq, the Japanese Nikkei, and then the KOSPI have all pushed to new record highs, underscoring a decisive return to risk appetite. I mean, it's unavoidable, you can't disagree with it. So investors are clearly no longer positioning around geopolitical headlines, and instead they're reallocating capital towards structural growth themes. So this, coupled with slight Fed dovish repricing, positions the Australian dollar and New Zealand dollar in a good position for upside just due to the beta. So yeah, that's where we're at on the Australian dollar and New Zealand dollar. I mean, if we just look at the CFTC positioning here, asset managers are overwhelmingly bullish and so are leveraged funds. So yeah, trading with the big institutions here, both on the insights. We'll go over the insights actually now for the Australian dollar. But you can see essentially not this one actually, this is for the second half of 2026, but let's say we just look at JP Morgan here, near term here, Australian dollar upside. So yeah, I mean, and obviously we've got the RBA meeting this week, which is going to be key, and markets are pricing. I mean, if we go to the daily bias, in fact, it does mention, yeah, so 95% implied May hike, which has already begun pricing into the curve and is driving a widening of the RBA to Fed 2-year spread, which is obviously positive. And then it says down here, over the next 24 hours, the bias skews towards modest AUD strength as the market consolidates ahead of the May 5th decision, with positioning flows favouring the long Australian dollar side. So yeah, long AUD, long NZD, that is essentially what we are looking at. Moving on to the yen, I'll keep it quick because obviously we have a lot of news around intervention, but essentially the fundamentals remain bearish, as the AI daily bias is saying here. However, we're obviously seeing intervention, which is clear as day. I mean, the 160 handle literally reacted exactly how it did back in 2024, and therefore I'm just leaving it simply. The fundamentals don't align with the intervention, obviously, because there's a reason we're having intervention. Therefore, I'm just going to leave it. You don't want to be guessing when the Bank of Japan's going to buy up a bunch of JGBs or even yen. So you want to just stay. I'm staying out of it personally. So yeah, just completely neutral on the yen, because fundamentals bearish, intervention is obviously bullish. I don't want to go near it. And then finally, the Swiss franc. So with the Swiss franc, I am bearish this week. Although the AI daily bias says neutral, I'm actually bearish. The reason I'm bearish is, well, number one, it's on specific crosses, but number two, gold is, number one, still falling in a downwards trajectory following elevated yields amid high energy prices and obviously this domino effect of higher inflation and then yields going higher, causing a more hawkish central bank, or other way around. And then obviously sentiment from the market favoring the geopolitical risk premium is also playing into this, which is obviously needing less demand for the Swiss franc, as sentiment is basically pushing flows towards the high beta currencies. So this, coupled with a dovish SNB and SNB governor, obviously we know the Swiss National Bank governor wants a weaker currency, plus elevated energy prices not affecting the short end of the curve in Switzerland as much as, let's say, the euro or the pound, makes the case for Swiss franc downside. So yeah, that is essentially the currency analysis this week on the fundamental side. Now moving on to the technicals. So starting off with AUD NZD, I think this level here is perfect. If not, this demand zone here looks nice, but I think a bounce from here makes sense. The 1-2, basically the 1-2-2, well, just below the 1-2-1-9. But I think this level makes a lot of sense for buys. AUD dollar, this level's very close, so I would not be surprised if we actually, on the open, dismiss it. We might come lower and then go, but essentially that's what I'm looking at. AUD Swiss caught a nice long last week, but I think this same level is key. I think we're going to see a bounce, and it's going to be from this level. I think we're quite cheap on AUD Swiss right now. So yeah, I mean, I'll be looking for longs off here once again. Potentially even looking to ride up to these highs here for a 1-3. But yeah, AUD Swiss, this is what I am looking at. Euro AUD, obviously this has been quite nice for downside plays, just following rate differentials and equities. I think this level here makes sense. Obviously strong versus strong, but when you zoom in, you can actually acknowledge, right, rate differentials are in favour of the Australian dollar over the euro, and then obviously equities couple that in. So then obviously I'm going to be looking to short this. Euro pound, exactly as I just mentioned. Euro pound is pointing to the pound strength is much clearer than euro at the moment. So yeah, I think this level here is great. If we get a pullback into there, and then there are some levels I'm kind of looking at for take profits. I think this level here, the 0.855, is when euro pound becomes way too cheap, and we're going to see a lot of big institutions buying up around here. But yeah, that's essentially what I'm looking at there on euro pound. Euro NZD. So same thing. I want to see price essentially come up into this zone. I want to see us come up into this zone, and then we sell off. Euro dollar. It's quite an annoying week for euro dollar. I think the best level I can at least see is this down here, and I'm not too sure we'll reach it. But yeah, that's what I'm looking at. The 11675. GU, exact same thing. 135 is the level I want to get in on the dot. NU, same thing. 586. Dollar CAD, if we go on the 8 hour. I highly doubt we get this much of a pullback, but if we do, I'll be more than happy to get into shorts of this demand. G Swiss, we're already in a key level, and to be honest, I think we're gonna this zone's clearly not holding up too well. I think this level here is going to be key, the 1058. So yeah, Euro Swiss, exact same thing. This level here. CAD Swiss, very, very ugly price action. We obviously got the bounce off these wicks here, but it's not looking to hold too. I think CAD Swiss will actually, we could off the open just immediately reject this level here and continue to go higher. If we don't, this is such a lovely level to get in down here. I'll probably double up my risk. But yeah, that's kind of what I'm looking at on CAD Swiss. GA, this level here. GA has been lovely on the lower time frames as of late, but I think this level here, looking at the 189, is very, very nice, and I believe that's everything. Oh no, NZD Swiss. NZD Swiss, I am looking for. It's an annoying one because this is the only level I'd kind of want to get in at right now. So I think off the open, if we don't gap below this level, it could be nice for sure. if we look at GN, yeah, we've obviously caught a nice position off this. I'd probably want to get back in at this level for downside. That's that. Finally, I believe this is the last one. Yeah. Oh no, two more. NZD CAD. NZD CAD. So I've got two levels marked out here because it's all narrative, but narrative driven. One narrative is obviously pointing for shorts here. One's longs there. And then Euro CAD, exact same. I'm looking for shorts here and longs here. So yeah, that is essentially the fundamental and technical outlook for this week. And yeah, as always, we'll catch you in the next one.